I'm Vidahlia Husek. I'm a realtor here in Palm Coast with eXp Realty, and I'm here with my friend at FLO Mortgage.
Hi, I'm Rich Cottingham. I'm a loan officer, and we are here at our FLO Mortgage office in Flagler Beach, Florida.
And I've compiled a list of common, frequently asked questions and stuff that even I was surprised to learn as I made my way through my real estate journey. So I just kind of wanted to bounce these questions off Rich here and share them with you guys. So first things first, I wanted to kind of get into like first-time homebuyer questions, since that's where a lot of these questions come from. And if you're not a first-time homebuyer, it might be a nice refresher anyway. So who exactly qualifies as a first-time homebuyer?
Yeah, it's not just the obvious, never bought a house before you're a first-time homebuyer, but also if you have not bought a house in at least 3 years, they do consider you as a first-time homebuyer.
What about special incentives, grants, or any kind of programs they might be eligible for?
Yeah, there's several different things. With the first-time home buyer, a lot of times we see people go the FHA route because it's 3.5% down. There's more flexibility with the debt-to-income ratio, and they accept lower credit scores. But you could also go with conventional loan as a first-time home buyer and put down as little as 3%.
What about?
We also have the FLO Forward Down Payment Assistance Program, which is great for first-time home buyers, where we take the 3.5% down payment and we're able to get a grant from a lender that covers that. Because it's a grant, it actually never needs to be paid back, along with some help from maybe some seller concessions, which we are seeing a lot more of these days. You can get into a new home with very little out-of-pocket expense.
Now, I know you kind of have to play it safe, but are you able to kind of give me a ballpark number, what you would expect someone to bring to the table to kind of be in the clear?
Yeah, I mean, it does depend on the purchase price, but you're looking at out-of-pocket expense for an appraisal and credit report together. You're looking at around $800. Otherwise, with an FHA loan, you can get up to 6% in seller concessions at 6% of the sales price that they can help with your closing costs, and that really should cover the vast majority of the closing costs. So you can potentially get to the closing table with very little out-of-pocket expense.
Now, in addition to those requirements, what are some more kind of like bottom line numbers people need to be aware of, like to get their foot in the door, like in terms of credit rating?
Yeah, so it really does vary depending on the loan type, but we want at least a 620 credit score. We do have some lenders that will do no score loans or go lower than 620, but you really don't want to go that route. The higher the credit score, the better it's going to help you with your interest rate. And just be as financially disciplined as possible. Save up as much money as possible. It's ultimately by renting, you are paying someone else's mortgage, and the sooner you can get into a home of your own and start building equity, the more wealth you're going to gain long term.
For people who might be self-employed, can you tell me how that process might kind of differ, like what kind of documentation they have to bring?
Yeah, it does tend to be a little more rigorous than a W-2 salaried or hourly employee, which calculating the income is very straightforward. With self-employed borrowers, we need a 2 years history, and then we have to average those 2 years of income. And we also have to look at tax returns, see how much you're writing off, because we're really taking your net income after all the write-offs versus a W-2 employee, we're able to use the gross income. So it is a little bit tougher for self-employed borrowers.
Got to keep those write-offs down.
So if you're a self-employed borrower, give me a call. We can come up with a game plan to put you guys in place for as soon as possible down the road where you're in a good position to be able to purchase.
And for those people who may be receiving gifted down payments, what kind of special declaration do they have to do, if any?
Yeah, again, get with me on that, but for the specifics, it does have to be a family member, and we do have to show that money being deposited into your account. Then we would need a gift letter from the borrower and whomever is gifting them the funds. It needs to be signed by all parties.
Okay. And that needs to happen before?
Yeah, I mean, ideally, want to have that in place, prior to going under contract, but
Like before the transfer, though, does that matter? Like before the funds are deposited?
No, you can deposit the funds, then get the gift letter. Just a matter of getting that all into underwriting prior to final loan approval.
Do student loans count against you?
Yeah, they get factored into the debt to income ratio.
But I believe it's like a percentage of them. Not
That's
the
if
full amount.
that's if they're in deferment. So if you have not been making any payments on your student loans, we have to factor in 0.5% of the outstanding balance as a monthly payment, and then that's how it gets factored into debt to income ratio. Now, if you do have a payment plan, and you're already paying X amount of dollars per month, that shows up on your credit report.
It counts like any other debt.
Exactly.
Okay.
Yep.
We had kind of spoken already, like the FHA 3.5%. What is the difference between FHA conventional and even like USDA and VA?
Yeah, I mean, they're all similar in that they all follow all the same federal guidelines for the most part, but there are some nuances to each loan type. Like with the conventional loan, we tend to go that route if you have good to great credit and a decent amount of money for the down payment. Generally makes sense to go with a conventional loan. FHA, a lot of times, again, first-time home buyers or lower credit scores, and flexibility with the debt to income ratio. We do have to deal with some mortgage insurance with that type of loan, but the interest rates are generally less than a conventional loan. Then with VA, obviously have to be a veteran or a current member of the military, where we can just pull your certificate of eligibility to make sure that you are eligible for a VA loan. And that's a great loan for veterans, 0% down. So very much deserved. And I help a lot of veterans, take advantage of that program. And also the USDA is 0% down, but USDA is limited to rural communities. So if you are interested in a particular home, you can look up that address on the USDA's website to see if it qualifies for a USDA loan.
Okay, is that kind of the only barrier for that?
There's some income restrictions to it. Palm Coast used to be a rural community, so we used to do a lot more of those around here. But Vidahlia and Flagler Beach are USDA.
Okay.
But it's like with I forget like the restrictions. It's like there are those income restrictions, so you have like someone being able to qualify for a house in Flagler Beach, right? So that's why you rarely do USDA loans in Flagler Beach. But now, great opportunity though. Yeah. So just keep that in mind.
Okay.
But
for anybody who might be waiting on rates to drop, because that's of course all we hear, what do you have to say to them?
The longer you wait, the longer you're paying someone else's mortgage by renting. The sooner you can get into your own home and start building equity, the better. Real estate is a long-term play, but for the average American like us, I mean, it's the best way for us to build wealth long-term. So the longer you wait, the longer it's going to take for you to get there. Interest rates are they're at historical averages right now. We'd all like to see them lower, but I've refinanced people within the past year that bought a few years ago at 7.5%, refinance in the mid 5s. The rates are constantly fluctuating, so you could buy now and potentially, in the near future, be in a position where we can, hit where the rates do drop to the point where refinancing makes sense.
What would you recommend that buyers go do, or potential buyers, before, obviously they want to go get pre-qualified, pre-approved, what are some big mistakes they can avoid?
Honestly, the biggest one are large car payments. We see people that maybe are living a little bit beyond their means, and you're buying a depreciable asset and spending a lot of your monthly income on something that ultimately you're losing money on, where you could be putting that towards a home and building equity in an appreciable asset. So I see a lot of people that make good money that actually don't qualify for a mortgage just because their debt to income ratio is too high, because they're just spending beyond their means. So maybe a little financial discipline. Don't spend more than you make. Save as much as possible. I know it's easier said than done to save money right now for a lot of people, but again, that's where the down payment assistance program is great. We have there's a lot of people around here that have good jobs, they have good credit. It's just very difficult to save money right now. So with the little down payment assistance program, some seller concessions, you can become a homeowner when maybe right now you don't think that's a possibility. So, the best way to find out is reach out. Let's have a conversation. Let's go over your numbers and let's see how much house you can afford.
Okay, and that also brought something else to mind that I hadn't planned to ask. So I've heard, you shouldn't be like taking out new lines of credit. So like something like a car, or like from the time you get pre-qualified, you probably want to avoid any lines of credit.
Yeah, just avoid having your credit run at all. Like, once when, I do a soft pull, that doesn't ding your credit at all, but, ultimately to go under contract on the home, we have to do a hard credit check. At that point, your main focus, along with mine, is closing that loan and closing on that house. So once when we do a hard credit pull, don't let anyone else do it. So obviously don't go buy a car in the middle of the process.
I see a lot of people, like, they're thinking about their new home, maybe they want to go get like a Lowe's, a Home Depot credit card.
Yeah, or furniture, right? You go to Ashley, Ashley has, 0% interest for 60 months or whatever. And it doesn't necessarily disqualify you from buying the home. It could just open up.
But if it's tight, it might.
Yeah, right. And it could open up a can of worms that you don't want to deal with. So, I've had borrowers just recently, check with me, a week or so prior to closing, and thank you for reaching out. If you can, just hold off. I know you want that refrigerator, but let's just close on the house and then then go take care of that.
Anything to close.
Yeah.
Okay. And then my last question for you: can anybody, out of state, even out of country, do the pre-approval process with you when they're looking to come to Florida?
Yeah, absolutely. One of my main types of borrowers are out of state.
Mostly.
Yeah. Being in Florida, a lot of people are still moving here. I would say the majority of people that live in Palm Coast are from the Northeast originally. I am myself, yeah, so it's very common. You see, a lot of people, retiring, or, people working remotely, or they get a new job opportunity down here, whatever it may be. You can absolutely start the pre-approval process even if you're not living here locally.
Okay, great. And that's all I have for you guys. I'll drop some contact info below so you can get a hold of me, and the best way they can contact you.
Yeah, call or text me. I'm local. I always have my phone on me, 386-986-6869.
Great. Thanks for watching.